welcome, Stuart. It's always a pleasure to do these fireside chats because they genuinely are the sorts of things that I would like to be doing by my fireside, sitting with a glass of wine or a glass of Bailey's, even to take the evening forward. So I'm delighted and honoured to be accompanied today at the other side of the fire by the head of industry strategy and design at Lloyds Bank. And Stuart, you've been a big fan of ours and a big supporter of ours, and thank you for that. But we also will benefit, I hope, today from you sharing some of your insights and thoughts about our industry and what's happening in it. I'd like to start by asking a question relating to, one of the three big things in our industry. We say it's all led by technology, led by innovation, and led by regulation. And we've got a whole lot of stuff potentially coming through. We've got the Treasury doing their thing at the moment. We've got FCA, of course, doing various consultations. Can I ask you, first of all, to share a little bit about how you see regulation in recent years and how it's provided an opportunity for an innovation rather than perhaps the curtailment of the freedom of our industry.
Okay, Tony, thank you for the introduction, and Happy New Year to everyone on the platform. And great to be on this platform, as many of us in various parts of the world are locked down. So just great to be engaging this afternoon. And Tony, you said don't go off piste too much, but I did see that Santa's brought you a new shirt for the new year, and that inspired me to wear a shirt today. And I tell you, this is the smartest I've been for months. So I've scrubbed up for the EPA.
Very good, very good.
But in terms of regulation and change over recent years, the nature of our regulation has changed. If we think after the financial crisis, it was all about structural reform and making the industry work again from its fundamentals. Over the last few years, that's very much moved on. And now it's about end users and closing end user detriments. So, we've got great companies here providing fantastic products and services, fulfilling customer needs. So you could think of an end user detriment as a need unfulfilled. And if the regulator is helping to close that brings more opportunity for those in the payments industry to serve those customer needs. And we've seen a real change, therefore, in that approach. We've seen opening access, so many more participants in the industry, new participants with new definitions that actually define a role, EMIs, PSPs, greater access to infrastructure, all those new members of our faster payment system and so on. Considerable focus on trust, which I think is really important for our customers. All those things that the SCA have done, confirmation of payee, the protections agenda, how we handle, refunds, complaints, and so on under the Payment Services Directive. And then also a focus on control, giving end users control. We've seen the card schemes bring out new methods of control, and also control over data and consenting and so on. So the agenda has really moved on, and I think that really has given lots of opportunities for innovation.
Okay, so is that the end of the road, do you think, or have we got other things coming down the line that we can look forward to?
Yeah, I think there's some continuity in what we have already. I think some of the existing innovation has a lot of life in it left. One of your topic tables later is on the OBIE, and I think open banking is just getting going, right? I think its R rate is probably below 1 at the moment, but I think there's lots of challenges over has it been successful, is it doing the right thing? I think its R rate really will start to take off considerably.
Yeah.
There are something like nearly 300 TPPs registered on the OBIE now. 100 of those are with Lloyds, and nearly 2 million of our customers have consented to the use of their accounts, either for payments or data. That's a lot of customers. That's
a lot of people.
that third parties are accessing. Right?
Yeah,
that's huge. So I think we're really going to see that take off.
That's very, very cool. Do you think there's something called? Do you think there's the equivalent of herd immunity or herd community? Maybe
maybe
community.
the herd consenting of data.
The herd consenting of data, that rattles off the tongue, doesn't it? I think it's going to become a thing. Chris Whitty, eat your heart out. I think we've got herd consent of data. Fantastic. But there is something about when that becomes just how things are done. You know, nowadays, it's just very, very, very comfortable to go and pay with one of these.
Absolutely.
Why would you ever go back?
And you're seeing the propositions change as well, though, Tony. You know, when open banking just started, it was simple aggregation, you know, which are the institutions putting the accounts together. And now it's about savings and investments. It's about personal financial management. It's about affordability and credit checks. It's about treasury services for small businesses. I think there's a real blossoming now in that environment, and I think we're going to see lots of these coming through, and some of them will take off. There's some unicorns in there somewhere, I'm sure.
Yeah, on the subject of unicorns, there's some very big technology companies that are making a bit of a play in payments, and I think the open banking things in a way gives us a chance to kind of make sure they don't overstretch the mark. They're all good and useful to have these innovators come through, but sometimes I think you've got to be careful to make sure there's a bit of balance. And I love the fact you've got 100 TPPs working with you already at 300. I think that's awesome.
No, it's great. So I think there's much more mileage to go there.
Yeah. Okay. So so the other thing that's quite interesting that I think you and I were going to talk a little bit about is this kind of what the EPA tries to sort of sets out to be a bridge between all sorts of different individual silos within the payments industry. And one of the things that's happened, I think, in recent years is the bridge between fintechs and banks has changed quite a bit. What are you seeing at Lloyds? And certainly, can you give me an example or two of where this might have been working really well?
Yeah, I think there are different models, Tony, and I think it's important for EPA members to understand the approach of the banks that they're dealing with, because they do it in different ways, right? So Starling has got its marketplace, right? So are you entering a marketplace? BBVA and Barclays have got their accelerator programs, right? Others might be looking for partnerships to build sector-specific solutions. You know, we see that in the States where the components come together around the medical industry. For Lloyds Banking Group, we're very much into strategic partnerships, which can perhaps accelerate the rate of change for us than we would otherwise have been able to do. And we've got two really good examples there where we're looking to take our platforms into the cloud so that we have a sustainable platform for the future. And we've partnered with Thought Machine as a product partner, and we've partnered with Form3 as a payments gateway partner also in the cloud. So we're very much looking at those strategic alliances for the future. And just so EPA members know, we do have Sam Reardon, our partnerships director, in the room. So do look him out, and I'm sure he'll be really popular to talk to this afternoon.
That's very cool to know that, and don't forget that everybody out there that, you know, if you've got banks, if you've got a bank like Lloyds who's got the right people here to talk to, then you should reach out to him. Watch out, you'll have your table full before you know what's happened. I'm not sure whether there's an equivalent of hovering and pouncing on Remo, but
yes,
maybe there is such a thing.
That feature, yeah.
So one of the things I like about working in our community is we have a whole lot of organisations that come to us, and they're doing some new and exciting things. And I'd just like to do a little shout out to the companies, the 7 new companies that have actually joined the EPA in the last few weeks. In fact, since the last time we had a networking session. It's Martrust, Repay Solutions, Payvine, My Chargeback, Tango Pay, Crown Asians Bank, who you may know, and Sokin. And these are all organizations that have come to us to say, we want you to be the catalyst for bringing us together with other companies. And I've got to say, I think that's really, really cool. And I, you know, your leadership of of this community, Stuart, is testimony to that's part of why they come. So when you're looking at future innovation that's driven by regulation, and this is a sort of regulation theme here, what are the key areas you think we should be looking at going forward?
Yeah, I think in terms of opportunity that the EPA members should be thinking about, I'll address that in three ways. I'll look at short, medium and long term. I think open banking is continuing to give the opportunity for account-to-account payments. So we've seen the switch to digital, right, in the COVID pandemic. That's taken for granted. But what does that mean? And what we see is a rapid increase in B2C payments, right? Yes, card volumes have gone up, but push payment, account-to-account volumes have also gone up considerably, driven by the APIs and driven by access. I think that's going to continue to happen. I think it's going to make the card companies think about how to compete. Will they have to increase their settlement cycles, make those more rapid? And I think as an industry, we need to think further about customer protections on customer to business transactions if we're going to have account to account payments in commerce. It's really, really important that customers continue to have trust. I think in the medium term, great initiatives in Europe and the UK on request to pay, right? So if we think about a post-COVID environment where families are going to be financially constrained, want more control, you know, requesting money, how much, when, I think is going to be really important. Match that with structured data to drive it all, I think is going to be really interesting. And then in the longer term, I see a second wind for cryptocurrencies, but actually in the regulated space. So we've started to see the regulators looking at central bank digital currencies, doing some experiments, how they work with stable coin and their own fiat currencies. But perhaps that's at the expense of all the unregulated coins, which perhaps might get pushed out a little as the regulated space gives more structure and more momentum to digital currencies in the future. So, you know, lots of interesting things that regulation is driving out there.
No, I agree. And the Treasury is just doing a review of EMIs and PIs and what happens if they get into an insolvent situation. That'll be interesting to see that. Watch out for my newsletter coming out tomorrow. We've got some comments on that. Also, crypto assets and stablecoins. There's a consultation just come out from the Treasury on that, and the EPA will be putting a submission forward. Anybody out there who wants to get involved with helping me and the team, please get on the phone to me or speak to Malik and arrange a time to chat, and we want to have your help and involvement. So no, you're right. I agree with you. That stuff is coming. It's been in the background for a little while, but it's definitely coming. So what about this year? I mean, it's cold and dark out there. But you know, is the sun shining in payments? What's your view? What's your view about 2021? There's a closing remark, Stuart, to make us all feel better.
It obviously hugely challenging for everyone personally and in business. And you know, if you looked at the numbers, you'd think, oh my goodness, this is really, really challenging. You know, credit card volumes down about 15%, cash volumes down about 30%, checks down 40%. But the good news is, from the payments business, there's real resilience in there, right? So our ACH volumes, BACS is robust and resilient. It's stable. Cross-border volumes are stable. Card volumes are up, and electronic payments volumes are up. So there is robustness in the market there in terms of that digital activity. And then I think that the next reason to be interested is this is kind of an outputs year for the regulatory environment. We've got HMT landscape review. You know, the government's going to be telling us what's important for the next 3 to 5 years. We've got Project Futures in UK finance. We've got the FinTech independent review, all going to publish this year. So, you know, if we in the EPA stay close to that, we'll absolutely know the regulatory agenda and then the opportunities that are going to come for the next 3 to 5 years. So I think that's going to generate a lot of interest for us as well.
Very good. So Stuart Bailey, thank you so much. The other reason I'm optimistic is our community is growing and thriving. and your namesake Andrew Bailey, who I don't know whether he is
no relation
at all, said just the other day, there's 100 billion pounds sterling, and if you're a Euro man, 115 billion euros of unspent savings that people have not expended during the lockdown. And when this is all over, we'll be out spend.
Smarter shirt for me, Tony.
That's what we need.
Just to see if I can match yours.
I'll send you a link to the discount shirt shop that I use, and then you'll know. Stuart Bailey from Lloyds, thank you so much for your time, much appreciated. And now we'll get on and do some networking. Please enjoy.
Yeah.
Great.
We will. There's just one question in the general chat, which I was wondering whether we'd have a little look at. From Bob, who says, with Brexit, the ability to make and receive payments into new markets is very important. Banks like Lloyds have been scaling back on relationships. How does that work?
So yes, clearly the role of UK, and speaking at a UK level, is going to be really, really important that we continue to maintain conduits for trade for our customers internationally. Having the right network to do that is really important, and certainly from a Lloyds perspective, we have tremendous network coverage directly into between 30 and 40 currencies, and ability to settle globally. So yes, whilst we're actively managing our relationships, the coverage remains that required to service customers fully. So yeah.
Okay. Well, it's sort of time to get on with our topic table.